Good morning, traders. We're 2 hours before the open on Monday, December 20th. This is a holiday shortened week. The primary theme is keep it light. You're not going to see a lot of market action this week. Yes, the S&P futures are down 50 points. We had a quadruple witching last week. We had a lot of volatility. We're going to get into that in just a minute. I'll talk about the overall market outlook right now. First, we want to take a look at last Friday's picks. CT SH was a stock that I liked. I still like it. I love this breakout right in here. You can see how the stock has been able to hold a breakout even though we had soft trading Friday. That is a sign of relative strength. Right out of the gate, you could see how CTSH was bucking the trend, had a nice opportunity to make money there. Yes, you had to take your profits. That's how the market is right now. When you have decent profits in a trade, you need to take them. You need to set passive targets because the market's chopping all over the place. I do not like doing swing trades right now. I feel that the market is transitioning. We've got the Fed getting ready to tighten next year. They've moved up their tapering timeline. They're accelerating it. They're now expecting 3 rate hikes in 2022. That is up from 0 just a few months ago. Conditions are changing. The market is priced for perfection. We've got stock valuations using a forward PE at 20-year highs. We haven't seen highs like this since the tech bubble of 2000. So stocks are not cheap. So let's take a look at the bearish pick that I had from Friday. It was a stinker. And there was no reason to short this stock during the day. Long green candles stacked. Oh my gosh, Pete, what happened? How could you have gotten this one so wrong? Well, there was a rotation into laggards. Big time. All the leaders from last week, from last Friday, were all of your beaten down stocks. Folks, this is nothing more than a short covering rally. Let's take a look at the daily chart and I'll explain what happens. So you start shorting the stock up in here. By the time it gets down here, you're starting to take profits on those shorts. And as you do so, you get this nice big release rally here. Yes, this is a bullish engulfing pattern. It would normally be very bullish, but not off of a low like that. You would need to see confirmation that yes, this is a hard low and the stock at minimum is going to put together a decent bounce that lasts at least a week. But when you have price action like this, you do not want to be going in and buying this long term. You want to have that support stabilize. You want to have it confirm over a period of time, and only when it starts to retrace and get through some technical resistance levels like that horizontal resistance right there, only then would you start buying this for a possible longer term trades. Remember, lower right hand corner of the chart, which is this right here, this is the lower right hand corner of the chart. This is where you want to be focusing on shorts, not buying dips. When you get a stock up here like CTSH, that is in the upper right hand corner of the chart. Very easy. Upper right hand corner. This is where you want to be buying stocks. Anything in the middle can present opportunities for us long or short. But on the extremes, you want to be following that trend. You want the wind at your back. I'm going to click through a few stocks here and I'm going to show you some of the bouncers from Friday. Roku was one. I could go right down the list. All the leaders. Let me see if I've still got the gainers from last week up. And you can see, well, NVAX is a biotech. So ZM, my point that I'm proving is Friday we saw a tremendous amount of short covering on the laggards. So that is why W rallied. Not because things changed fundamentally for the company, not because the technicals improved dramatically. It was just a short covering rally. So TDOC, same thing. I'm just going to click through. I'm going to show you. RBLX, same thing. All of your top gainers went through. Now this actually could be an interesting play right here because you've got 1, 2, 3. DOCU could be getting through this technical resistance level and it could start filling in this gap. Click GTC, double click on that bar right there. Now I've got a GTC alert. If it starts to get into the gap, yes, this one's got a chance to fill in some of that void. AMC, bottom fisher, RCL, bottom fisher, Penn, bottom fisher. This is really the chart that I wanted to focus on because all these stocks, this is the typical pattern: sell, 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 sell. And then at the very end, just Friday, rallied. Zillow, same thing. All of these laggards really caught a bid on Friday. This morning, the S&P futures are down 50 points. If you go through and you look at charts like the ones I've just shown you, those stocks are likely to give back those gains. Today, there are going to be some decent shorting opportunities in those. So if you see a stock on a chart that rallied strong on Friday and that's been super, super weak for a very long period of time, and it's in the lower right-hand corner of the chart, those are probably going to be some decent day trading, shorting opportunities for you today with the S&P futures down 50 points. So let's move on. I still like CTSH. If the market were going to bounce today, that would be a decent pick. But I don't see a bounce coming today. In fact, we're going to go into the 5-minute chart first. Let's talk about what happened on Friday. You can see that we had the big gap down, established a low, and we had a big rally off of that low. So this was actually nice. We had some stacked green candles, pull back, higher low, double bottom. I thought we were going to have a nice upward sloping channel and that we would have a chance in the last hour of trading to fill in the gap. That didn't happen. In fact, the opposite. We had a little bit of selling into the close. This morning, we're continuing downward. D1 chart, daily chart. Conditions have changed. That is your context. That is your takeaway. So now let's talk about what's changed and how do we know? Well, in the past, if we zoom out, we can see the extremely strong trend that we've had during the course of the last year. Now, if you look, these dips only lasted a day or two. Boom, bounce. Couple days, bounce, couple days, bounce. Here, very, very, very brief. Well, this all in here shows you how anxious buyers are to get long. This was a bit more prolonged. This drop right in here took much longer to unfold than all of these other drops. That's a warning sign. That tells you that there is more persistent selling pressure. Okay, no problem. Rally, rally, go, go mode. Here we come. It's November, December, year-end rally. We rally up, and now all of a sudden we get another one of these big dips. Well, we haven't seen that in a long time because we've only seen these tiny little brief dips. Now, this one's getting pretty prolonged. No problem. We have a dip. Zoom. We're going to go right through the all-time high. We're off to the races. It's the year end. We're going to see asset managers out there buying like mad, right? No. We're seeing selling again. And there you can see that resistance level that I'd pointed out last week. There was your FOMC rally last week, Wednesday. I did the video Thursday morning before the open, and I had mentioned to you that I felt this rally here was completely contrived. Well, how do I know that? Well, I know that, first of all, from reading the FOMC minutes. They were about as hawkish as I've heard them in the last 2 years. Their forecasts for inflation were higher. Their forecasts for Fed tightening in 2022 were increased dramatically. They are accelerating their tapering. Interest rates are going higher. This is not a great thing for the market, especially in the initial stages when you have a reversal in monetary policy. But what happened? The market rallied like mad. So we don't try to analyze the news, we follow price. So we had a nice big rally on Wednesday, closing on the high. Everything is fantastic. Looked like we were going to get some follow through Thursday, and then Thursday prices reversed the entire day. We gave up half of that long green candle. That is bearish. Friday, gap down. Today, gap down. We are probably going to be testing the support level, put up the major moving averages. We've got the 100-day moving average coming into play. We've got the 50-day moving average coming into play. You can see 450 is approximately that support level. Before, that was above the 50-day moving average. Now, that would actually be testing the 50-day moving average. So here's the real rub. November and December are two of the most bullish months of the year. And that's because asset managers are not aggressively selling stocks. Everybody wants that warm fuzzy when they open their year end statement. They want the market to just tick, tick, tick higher into year end. Asset managers get paid for assets under management. When you're up here, there are a lot more assets under management because of valuations. That means that they get bigger bonuses into year end. So there's a disincentive for asset managers to sell into year end. That's why I believe that anomaly exists. And you don't typically see a lot of selling. That's changed. When you do not get a year-end rally, that is a big warning sign for 2022. So on a longer term basis, with your investments, not talking about trading, with your investments, you may want to lighten the load a little bit. Know that stock valuations haven't been this high since the tech bubble. Not a bad time to take some chips off the table. You've got the COVID variant increasing. You've got job growth has been very sluggish. You got inflation coming in pretty hot. So, Pete, does that mean that I should liquidate everything and not be long in 2022? No. I think that if you're able to time some of it and wait for a nice little drop, wait for support to form, you'll have a good entry point. But I think that you're going to have to be a little bit more active managing your portfolios in 2022 than you have had to be in the last 5 years. If I go to a weekly chart and I zoom out, you'll see what I mean. There's your weekly chart. I don't even need to zoom out. You're not going to get this type of price action, just absolutely relentless, sustained buying. You're not going to see that very often. Artificially low interest rates have paved the way. Corporations issuing bonds, very, very cheap debt, using those proceeds to buy back shares of stock. That is one of the reasons that the market rallied just a week ago. We saw Bank of America, Goldman Sachs coming out and saying more than half of their trading volume was attributed to these corporate buybacks because there's tax reform and the corporations were rushing in to get ahead of that window. And that's what fueled this rally right in here up until about December 10th. And now that window is closed, so that bid is softened. You've got rising interest rates, and you're starting to see some selling pressure. So the main gist of what I want to tell you today, a couple things. One is don't trade. You don't need to be trading actively this week. You're going to see lower trading volumes. But Pete, look, heavy volume right here. This is heavy volume. Yeah, a lot of that was quadruple witching related because you've got asset managers rotating, rolling their futures out. And this, I believe, the reaction to the FOMC statement was all quadruple witching related. Once those programs kick in, they fuel that move and we closed on the high. But you can see how those types of gains, they're very fluffy and they are easily given back. So keep your trading very, very light. You're going to see lower volumes going into year end. This is what we see every year. You're going to see more choppy price action. If you are day trading, keep your size small, trim your trade count, be super, super selective. We're going to get a pretty big market drop this morning. We're going to come down into this level right here. I believe 455 is about where we're at right now. S&P futures are down 54 points right now. So this is about where we're going to be opening. That is a stone's throw from the 100-day moving average. I believe that 100-day moving average is going to be in play this week. It may not be today. So what kinds of patterns would I be trading? Well, first of all, when you get a really big market drop like this overnight, we want to take a look at what the overnight futures did. I will tell you they've traded considerably lower than where they are right now. So the market has bounced overnight. And I feel that that shows that there is some support out there. What you'd want to see in the first 5 minutes of trading, and I'm going to go into a 5-minute chart. So we've got a big drop like this. The pattern that I would be most interested in, because I feel that that 100-day moving average can and will be tested this week, is drop, green candle, green candle, green candle, start to kind of hit resistance, and then whoosh, you get your wave of selling. And that still may happen because everybody has been super aggressive in buying dips for the last few years. So that's ingrained. As you see that little rally to try and fill in the gap this morning stall out, that is where your good shorting opportunity is going to be. If we get ka-chunk, 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 big drop lower, stacked red candles, there's an opportunity to get short, but I'm very, very cautious buying those types of moves until I can see defined support after a move like that. And it would probably come in the form of multiple tests of that support, and then you get a nice little rally off of it. So that's also a possible pattern. We could also just compress. I'm giving you a lot of different scenarios of what could happen this morning. Just wait and see what type of price action you're going to be getting. I would not be super aggressive with longs. I really feel that there's some weakness right now. Given my market bias that we're probably going to trade lower the next day or two, I would want to be shorting those bounces as opposed to being a buyer of deep troughs and dips. So I hope that helps you. Let's take a look and see if we can find some stocks. And one thing that's curious is that, not curious, it's just the way things work out is that when you've got searches that you run, and bullish searches to this point have been yielding tons and tons and tons of stocks. Great stocks all over the place. When you start running those same searches and you run their counterpart, and you see a lot more bearish candidates than bullish candidates, that in and of itself is a warning sign. So what I did was I ran a search, and I'm just going to be looking for stocks that are close to their 90th percentile on a 60-day basis. So let me talk about that very quickly. You take the last 60 days, show me a stock that is in the upper 10% of its range. So I would mark 90 as the lower boundary, 100% as the upper boundary. I want to see heavy volume from Friday, and we can even mark that off. And option liquidity, excellent. Those are the only criteria. So let's see what we've got. We've got actually quite a few stocks here to try and knock through, so I have to limit them in some way, shape, or form. So I'm going to be looking for strength on a daily basis. Okay, well, because those are all in the upper 90th percentile, we're going to get a lot of candidates. So let's see if anything finished above the prior day's high. You cast a wide net, and then you start drawing that net in so that you don't have as many stocks to flip through. Daily chart, that's all I'm looking for. What might I possibly want to trade on the long side? Abbott looks good. Upper right hand corner. BTI through the 100-day moving average. It's a chunky mover, you can see, very gappy. Not too excited about that. A lot of the consumer staple stocks, British Tobacco, Philip Morris, Procter and Gamble, those stocks have actually been doing well. That's a little bit of a warning sign too, because it's a place for asset managers to park money during times of uncertainty, because everybody's still buying their cigarettes, everybody's still buying their toothpaste. So a rotation into that sector doesn't necessarily mean that it's going to be a sustained rally, but it should continue to be favored as long as there is market uncertainty and market weakness. BTI, not too big on that one. Abbott, I do like. CCI, looking pretty good. Cerner, love that big breakout right in there. Got to be a little bit careful. Got to make sure that it finds support. So typically on these breakouts, you're going to have a lull for about a week or so. Sometimes the stock retraces. Sometimes the stock holds its own. If it's holding its own with the market falling out of bed around it, then you know that that support is firm and the next move is likely to be higher. I like CERN. Very choppy stock there, choppy one there, looking for nice breakouts here. That's actually pretty decent IRM. Not a bad breakout there. This is a type of thing where I'd mention when you have a stock that's falling, you want multiple support levels. There's a nice base that's formed. It's been able to rally up. It's above the 100-day moving average. I'm not saying buy this stock, but I'm saying this is the type of pattern where you can actually start buying a stock because it's found support. Still looking for the one. SWCH. Not bad. If it can get through this resistance level, I like it. It's starting to creep, creep, creep higher. Look at that volume. This is pretty nice, but you can see it hasn't gone anywhere for a very long period of time. On a 50-point S&P drop, I'm going to put my alert line up there. There's no reason to think that this stock is all of a sudden going to catch fire. So we'll continue to go down, see what else we can find. YANG, ZTS. ZTS actually not bad. That is a nice little stock in here. You can see how it's been grinding, grinding, grinding higher. Big volume on Friday. Able to close above its prior day high when the market is what? Selling off. That's a good sign. Put up the SPY overlay. Market down, stock up. Market pulls back, stock along with it. But here you can see what it did late in the day. Market was down pretty heavily near the low of the day. Stock pulled back, but was still able to finish higher on the day. ZTS, I'm going to make that my long of the day. I also like Abbott. There are a couple of other pharmaceutical stocks like Pfizer that I've been highlighting, but ZTS and Abbott, I think those are going to work well. So what are we going to short? What are we going to do on the short side? Well, I've already mentioned to you, look to those laggards. If you have a list of gainers on Friday, click through that list, look for those really big gainers, look for the stocks that are in the lower right-hand corner of the chart. Those are going to be your best shorts. W could be an excellent short today. So let's run a search. Let's try and run a counter search here. We're going to go to week versus the S&P 500 on a daily basis. We're going to go stock below prior day low. Lots of stocks should be able to meet that criteria. Here, instead of looking for the upper percentile, we're going to use a 1% to a 10%. So these stocks are going to be in their lower 10 percentile of the 60-day range. Let's see what we got. You can see a lot more stocks coming up in this search than we had in the previous search. Same criteria. That tells you that there is a negative bias already starting to unfold. So we're just going to take a look at a couple of these. I'm looking for that bearish stock AN. Go into the daily chart and take the SPY overlay off. Starting to break through this horizontal support. Click on that. ZM, all I'm doing is going through this list. So I'm going to take this list off so I don't have to keep popping it up because every time I want to look at it further, I'm getting off that chart. BBY, big sell-off there. I'm looking for something that is just kind of starting to test that lower end of the range. Earnings before the open, don't want to miss with that. CMI. Just going to keep looking. This is not bad right here. EBON, poking through that lower end. Wouldn't touch that. FXI, which is China. You can see how that's making a 52-week low. This is pretty nice. You can see how it's starting to soften. HDB. I'm going to try and just scan through this visually and see if I've got some familiar symbols. LULU. Lululemon, another retailer, through that horizontal support, through the 100-day moving average. Let's use the crosshair to confirm. Still got a little bit of support here, a little bit of support here. It takes out this support. You're going to see LULU go down. I like that one. That may be my short of the day. Mara also looking pretty good, starting to crack down here. Would like to see a little bit more of a long red candle on Friday, because we did have market weakness also. So these are some of your weakest stocks. MTG also looking like a pretty dang good short with that horizontal support breached right there. Still lots of room to the downside. MTG could be my pick of the day. Netflix. This is a weak chart. Breaking through that 100-day moving average. It's got room to run. And we got a couple other big names in here. Target getting through this 100-day, that horizontal support level right there. Oof, going to be tough pickings here. Netflix or Target? Which one should I pick? I'll put them both on the list. You can take a look at both of them. I'm going to go with Netflix. You could pick either one of them. They both look good. The main point is that here's the pattern that you want to see. And this is what I'm going to be mentioning to you when I review this trade. Pete told me to short Netflix, so I just sold it right on the open. No, that's not what you want to do. If the market bounces, what you want to see is you want to see Netflix weighed down, meaning Netflix sells off, market goes up, 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 up. Hey, there's that little bounce that Pete told me we might get on the S&P futures. But Netflix couldn't get off the deck. It just sat there. So then when you get your market rollover and the S&P starts to weaken and roll over and Netflix can't get off the deck, ka-chunk, 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 you must see that relative weakness. When the market rallies and Netflix does not, then you know it's relatively weak and that short is setting up for you. Same thing. When you get the market selling off, selling off, selling off on the open like this, and let's say that Abbott opens a little bit lower, market continues to go down, and Abbott goes tick, tick, tick higher. That is relative strength. That tells you we're A-OK with Abbott. That's a stock that wants to move higher. That's a stock I want to buy. I just need to wait for market support. Ooh, bullish engulfing candle through the halfway point of that last long red candle. That looks good. Whoa, stacked another long green candle. This is not a solo short covering bounce. This is legit through the downward sloping trend line. Abbott looking strong. I'm in. Market starts to weaken, roll over, take your profits in Abbott, move on. You're going to get a couple windows of opportunity each day. Volumes are going to be really light, so be careful. It's a time to tread cautiously. That's all I got for you today. If you like the content, please tell other people that you know that are traders, whether you visit chat rooms or forums. I'd love to build out my channel. Lots of great educational information. More than giving you picks each day, I want to give you the education and the knowledge behind those picks and why they work. And you see them day in and day out. That knowledge is going to help you for a very, very long time. A pick is only a pick, and it's good for a day or two. So please take every opportunity to learn. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.